Welcome to the TMA webinar, where we're looking at sustainability and fashion, and we touch upon considerations such as consumers, governance, language, and finance. The event is kindly sponsored by Gunnar Cook, a multidisciplinary practice where we don't believe in law as usual. We find law inspiring, with offices in the UK and now have recently expanded into Europe. We have a couple of housekeeping points. The event will be recorded, and any questions that you'd like to raise, please use the chat box throughout the event, and we will be addressing those questions with our panelists towards the end of the event. Now I'd like to welcome on our virtual stage Claire Press, Carsten Stacker, Andrew Griffiths, and Marina Bradford. A hearty welcome to you all. I will be asking the panel to introduce themselves, and I'll take the opportunity to introduce myself to the audience. I'm Roshmi Dubey. I'm a partner at Gunnar Cook and have been practicing law for 25 years, specialising in negotiations, supply contracts and disputes. In addition, I'm a business columnist for the Yorkshire Post and also serve as a member on the TMA European board after serving on the UK board. I'm also governance and policy ambassador for the Institute of Directors and have a passion for corporate governance and the boards and all its elements around it. Please now, can I welcome our panelists. Claire, may I start with you in your introduction, please?
Thank you, Rashmi. So I am the presenter of a podcast about sustainable fashion called Wardrobe Crisis, which is based on my book of the same name. And it's coming up for its 6th series, but basically each week we interview people from all facets of the fashion kind of conversation about sustainability. It might be designers, but it might just as well be a climate scientist. I'm also the co-presenter and producer of the UN's Ethical Fashion podcast, and I'm part of various fashion industry sustainability initiatives and organisations, including the Sustainability Advisory Board for Copenhagen Fashion Week, and I'm part of Fashion Roundtable in the UK and Fashion Revolution in Australia, where I live. I'm in Sydney. That's why it's the dark here. So I'm really excited to join you. Thanks for having me.
Thank you. Carsten.
Yes, thank you. Good morning, everyone. My name is Carsten Stecker. I'm a partner with PwC in the Frankfurt office. My background actually is in the financial markets. Before I joined PwC about 4 years ago, I worked in investment banking, mostly in the equity capital market side. Took a lot of companies public, did a lot of capital raisings and other equity issues for corporate clients. And I would say about 3 years ago, we started to realize that sustainability and ESG factors actually become an integral part of corporate valuations and become very relevant for the capital markets. So in that context, we're looking at advising clients on ESG strategies, also in the context of capital raisings. In addition to that, I'm also responsible for our sustainability service offerings to the private equity industry, which is also playing a very relevant role, in that context.
Thank you, Carsten. Andrew.
Hi, everyone. So my name's Andrew. I am Director of Community and Partnerships at Planet Mark. We're a sustainability certification that tracks progress in carbon reduction and creation of social value for organizations and for real estate and for products. I'm also the chair of the Institute of Directors National Sustainability Task Force and helping shape that. And yeah, sort of looking forward to the discussion. I want to keep it nice, short and sweet so that we can crack on with the questions and stuff. So lovely to meet you all.
Thank you, Andrew. And Marina.
That was my cue to keep it short. I'm Marina Bradford. I'm based in London, and I'm a founder of BMIRI, a B Corp certified impact consultancy. I'm lead consultant, sustainability, environmental management, and supply chains, which basically the areas of my focus. And my background is governance, risk, and transformation. So I also started my career in PwC and have worked across different sectors and countries internationally before setting up independently. And I now work with public sector as well as private sector across different sizes of organizations.
Thank you, everybody. So let's get on with it and talk about what everybody is really keen to discuss, which is how sustainability and fashion are working in particular. So sustainability is an interesting word, really. It has a lot of different definitions by people and how they use them. And what is fascinating, it's also used differently amongst countries. So brands probably need to be a bit clearer about their definitions. For instance, based upon a 2020 report by CGS on retail and fashion, sustainability was surveyed between the US and the UK. The US defines sustainability as eco-friendly, reduce waste and ethical practices, while the UK described it as ethical practices by which a company will be judged. Both the US and the UK, however, scored highly over the 50s, believing that companies were not transparent. So if sustainability has so many different definitions and contexts, is it something that's just nice to have within business? What is the business case for sustainability? Claire, may I start with you, please?
So interesting that you talked about those different definitions. And when we talk about sustainability, we need to consider people and planet. So social sustainability, not just environmental sustainability. And I think the industry, or the fashion industry, has been getting away for too long with this idea of sustainability being only eco, so they can focus purely on materials, or carbon and materials, but that tells only part of the story. Without social sustainability, we have nowhere to go. I would also say that it's unhelpful, if not dangerous, to talk about sustainability as a trend, like, I don't know, silver boots for spring, right? It's not a trend. Sustainability is the only way forward, and brands need to take their responsibilities to people and planet seriously to future-proof their businesses. And I think that's something that we ought to really, I just want to say that at the outset, like, this is not just some nice to have, this little fad that you can take up if you like, or push over to one area of your resources and just, you know, the sustainability team tackle it. This is actually the only way forward. And the last thing that I would say is that let's talk about unsustainability before we sort of dive into this stuff, because the current fast fashion system, to me, epitomizes, or if you like, is the definition of unsustainability. So clothing production has doubled, if not tripled, since 2000, while clothing utilization, which is the amount of wear we get out of our clothes, has plummeted. I think it's 36% on average and 70% in China, and that's from 2000 to 2015. But you've got more clothes than ever before, worn for less time than ever before. And this is a story of unsustainability, where we're throwing vast amounts of textiles and garments into landfill or the incinerator, and also wasting human resources or lacking in respect for those human resources. So I think, yeah, we need to redefine what sustainability means. But first and foremost, I would advocate for never talking about it in the context of a trend and really embedding it deeply into business practices.
Thank you. Andrew?
I totally agree with Claire on the trend front. I sort of reflecting, you know, is weather forecasting a trend? Is it a fad? No. We look at what the day or the week is going to look like from a weather perspective, and we adapt our schedules and our plans accordingly based on what we wear, based on, you know, how we're going to respond to it. Is healthcare a fad? No. There are fads and there are trends within the subject matter. So there will be trends within sustainability, but sustainability is a fact and a reality that organizations have to adapt to in exactly the same way as they have to adapt to a financial crisis or they have to adapt to a healthcare crisis. And so it's something where, you know, and as we've seen over the past year, it just has continued to be reinforced that organizations with higher ESG ratings and sustainability sort of practices and more purpose-led brands have consistently outperformed and proven more resilient than organizations and brands which are not. And so that's why we've reached this crucial tipping point where over the past couple of years, we've flipped from sustainable, you know, investing into an ESG stock or portfolio was seen as something, you know, you were impact investing and you were sacrificing some of your returns in order to feel good about what you were investing in. That's no longer the case. It's really quickly shifted across from it's not as, you know, lucrative or profitable to invest in sustainability related companies and funds to it's it's just as profitable to it's now more profitable, especially when you properly factor in the returns over the longer stretch. So yeah, it's certainly not a fad, and the business case for it is self-evident.
Marina.
Thank you. Yeah, firstly, is it a fad? No, it is not. But actually, I think what I would call it is a blind spot, because sustainability is probably an area of risks, an area of impacts on organization or of organization that we just historically have not really looked at or paid enough attention in the same way that we have done to maybe other risks that were closer to us and more visible to us. And therefore we could price them and measure and define. Sustainability concerns, like Claire mentioned, there's a wide range of them. It's not just environmental and eco, term or prefixes. It's a wide range of areas that are making up our ecosystem. And now we're seeing more of them because we actually see in physical implications. We see in very real results in social challenges. And in a globalized world, we are starting to see more of impact because we're more connected, because we have Instagram and we have all sorts of social media, digital connectivity. We now hear the stories. Is sustainability new? I don't think so. If you actually look back in history, have social challenges in supply chains been issues? For centuries. We just had very different words for those things. And we just probably looked at those challenges in a very different manner. It's now becoming closer to home. It's now becoming something people talk about. So what may be a trend is how we talk about it and maybe the terminology we use, because in absence of those definitions, everybody does understand sustainability differently. In absence of definition, you can't measure it, you can't control it, and you can't do anything about it. And therefore we have very different actions. So that may be a trend. But if you look at actually what makes that up, it's risks. And it's the risk to existence of a business. It may be risk to existence of communities. It may be risk to existence of the ecosystem and the life as we know it. It might sound as a doomsday, but the reason it's becoming a profitable business is because risks can be quantified when they go really badly. And they have done, right? We've seen it in the last year, 2020. That's kind of a really good example. And so when you start seeing actually the cost of inaction, companies start acting, ESG becomes a thing you do, not because somebody said it sounds good, but because you realize if you don't do it in the next 5 to 20 years, or maybe 1 year, you'll just lose money. And I think when it becomes that, it becomes a really easy conversation. It stops being a blind spot. But until then, and until we actually break it down from sort of bigger words to something that we can quantify somehow, and maybe in different ways for different organizations, it's probably going to be a trend of just using the word.
Thank you, Marina. Carsten, same question. And if it's possible, because definitions are so important, is that something that investors consider?
Yes, they certainly do. I mean, first of all, I completely agree it's not a fad. I mean, sustainability is the question around the future viability of a business model from a investor perspective. And if we try to define sustainability in the context of fashion, what are really the issues? The issues are, on the one side, on the environmental side, we're talking about greenhouse gas emissions, 3 billion tons per year being emitted by the fashion industry. That's more than the airline and the shipping industry combined. That's about as much as Germany, France, and the UK are emitting combined. So it's a huge issue. Secondly, on the ecological side, it's the water usage. It's around 80 million metric tons or cubic meters of water being used by the industry per annum. And it's what also has been mentioned already, is the waste of resources. I mean, there's 92 million tons of textile waste per year. Only 1% of the textiles are being recycled. The vast majority of apparel items is being landfilled or incinerated within 1 year. This is certainly not sustainable. And then the second part of sustainability in that sector is the ethical aspect of that. We're talking, or we're hearing a lot, or reading a lot in the news about issues around child labor, around low wages, around health and safety risks. We all probably remember the horrible collapse of the garment factory in Dhaka in Bangladesh in 2013, which I think cost the life of more than 1,100 people. So with the supply chain of that industry being very opaque and very, very difficult to look into. There are many issues that these companies need to consider, and investors are looking at that because the public, the society, the stakeholders as such are looking at that. Consumers are changing their minds. The younger generations are changing their minds and getting more sensitive. We did a recent study where 63% of Generation Y and Z consumers said that they prefer sustainable products over normal products or regular products. So this is a business issue, and it's about the future viability of that business model. And this is what investors are looking at. Investors want to understand how that business model is faring in the future, and sustainability issues are playing into that with a rising degree.
Carsten, if we think about the definitions and we move forward about interpretations on what consumers place emphasis on, there was a report from the Fashion Revolution Consumer Survey of 2020 where they interviewed 5,000 people across Europe, and the ages that they interviewed were between the ages of 16 to 75. And what they found was the European countries were actually agreeing and hitting in the high 70s and 80s that it was important for fashion brands to have sustainability certificates, which on my interpretation, and this is my interpretation of the data, is that it means that the consumers were placing emphasis on policy and regulation to play a bigger role. Having that in the back of our mind, is sustainability, are we able to leapfrog it by placing greater regulation and legislation similar to finance, or should sustainability have already leapfrogged because it goes hand in hand with governance, i.e. it is good practice? Andrew, can I start with you, please?
Sure. So can we leapfrog it? Leapfrogging it makes it sort of sound like can we somehow shortcut around to so that businesses don't have to think about it. They're going to have to think about it. If it's not leapfrogging, it's can we enforce it? That doesn't sound like skipping something. Actually, it's much more significant for businesses than that. And so the Institute of Directors, for example, and Planet Mark both support something called the Better Business Act, which is essentially if this law is passed, it was announced. I think the launch and announcement event of the act was literally yesterday or earlier this week. But essentially, this would be if people are familiar with B Corps, it would and the change to the sort of company sort of fundamental purpose and sort of articles of association. That this potential change in UK law and to the Companies Act could create the B Corp shift en masse as a regulation that goes out by shifting the focus of businesses from being legally required to consider the needs of shareholders to being legally required to consider the needs of all stakeholders, which is a shift in thinking where people start having to think about their employees, their customers, their suppliers, their local community and local economy that they work within. Sustainability is, I'll say it's coming. It's here. It's not going away. And I'd argue it was never. We're just talking about it in a new way. Sustainability isn't just about environment or social. It's also financial sustainability. In the realm of turnaround management, why are turnaround management organizations brought in? Because the organization has been unsustainable in some way, financially. Often, I think, socially unsustainable because they've been losing their talent. They've not been retaining people, and so they've been struggling to sort of, keep up in the market because they haven't been innovating. They haven't been investing in technology. So sustainability covers all domains, and as Carsten said, it's about the future viability of the business, and that's why investors are looking so heavily at it, and that's why. I don't think we can leapfrog it, but I would say that businesses need to be aware that if they don't get ahead of it, it is going to come and bite them in the backside, and they're going to have to move. And if at that point if you don't start shifting on this until you absolutely have to, it might already be too late for you, because it's going to require such a heavy amount of investment, behavior change, logistical sort of change in your processes, that you won't be able to move fast enough to meet the regulations, or indeed to meet public demand for what you're expected to be doing. So
it's interesting what you were saying, Andrew, because actually the sustainability element has always really been there in the background with the Companies Act, just saying, you know, we should be adding value to the companies and to our stakeholders, but people are now needing to be forced into it. Marina, would you like to add to that, please?
Yeah, I think that's a really important point, that actually, arguably, the governance, good governance, already commands that you do make sure that you create value for the shared value for your stakeholders, and it doesn't necessarily preclude you in creating value for your shareholders from actually doing it in the right way, in an ethical way, in a transparent way. And you do have a fiduciary duty to make sure that you're still delivering and doing this responsibly. The definitions of what responsibly might mean and what all of that looks like, that of course can be interpreted in very different ways, but it is good governance principles to make sure that you do risk management. For example, of course, it might need to be redefined, you know, which kind of risks, but to the point we were discussing earlier, these are the risks we just haven't necessarily looked at. So actually, if you think about what the current expectations technically should be really in the good governance realm for Companies Act House, that is already embedded, it's just not really enforced. And I think that's the important bit around making it clear, making it very transparent, making it very defined, actually what we mean by fiduciary responsibility, or what we mean by governance and risk management is X, Y, and Z. So there is that transparency, there's nowhere to hide in terms of, yes, I'm doing it, but you know, I'm missing out on stuff like bits. The other area here is also, you know, if you do think about that sort of extended value chain and responsibility, and if we talk about the good governance, you do need to think about what that might look like in reality, and how do we then have an argument, yes, I am actually governing my organization properly. A few people who may have died as a result of that somewhere the other side of the planet, you know, if you start thinking about it in those terms, it's really difficult to kind of argue that, right? So if you think about carbon emissions, for example, there was a report recently that talks about how many people actually have died globally as a result of emissions directly, right? So we know fossil fuel and connectivity to health and lives is already been linked. But until we start thinking of it that way, it's very hard to say, actually, I am not doing things in the way I should be doing, because there's implications, because they are outside of my visibility or outside of my direct control, and you can start arguing, you know, that sort of chain of reactions. To the second half of your question, in terms of regulation, you know, leapfrogging, I think we absolutely have to have regulation in this space, because when we know that there are certain risks and implications that are that significant at that grave, we can't really leave it to chance, because there are a lot of companies that would have to take it upon themselves to do it. Just the sheer scale, sheer complexity, sheer, you know, resource availability to various organizations. Innovation does come from private sector, but with things like that, when we have a timeline upon us, there do have to be regulation that will actually give a bit more motivation to those who might not have the resources or might not see the world the same way at this point. And I feel like with transformational changes of this nature, it's very difficult to rely on that many people to align on the same sort of point, right? It will be too late, to the point Andrew made earlier at that stage.
Those are really interesting points, Marina. And one of the things I think is, you know, that you said was, you know, being able to change the way we think and placing greater emphasis on our fiduciary duties. Carsten, from an investor's perspective, you know, are you looking to see what kind of regulations that the company are putting in place themselves around this area? Is that a consideration in this type of, where governance is still needing to be brought in?
Well, first of all, I agree with what Andrew said. I think it's a very important point. Don't be a laggard, be a leader in that industry. I think that's very important. And you can see that some of the larger brands and fashion companies are actually making sustainability, you know, a core selling proposition. And as they bring that out and put that into the forefront and use that in marketing and positioning themselves, it also increases the awareness of consumers, and that puts companies who don't act basically further back. So there is sort of an element of acceleration in that. Now, from a regulatory perspective, I think we need to see the overall end game, if you want to put it that way. We have this 2050 net zero target, and we all know that we have to achieve that. And we have, well, around 4% of global emissions are coming from that sector. So there is no way out. We need to decarbonize. We need to be more, careful with our resources. So companies that voluntarily take steps forward will lead in an industry that has to change dramatically. Yeah, I think, from a regulatory perspective, I mean, we're seeing that with respect to Modern Slavery Act. We're seeing that with respect to more sensitivity, for example, with respect to the Uyghur issue in China, for example. So there is more regulatory intervention, but I think it will definitely come from two ends. It come from the CO2 reduction necessity, basically, and it will come from also from the ethical and labor part of that.
Thank you, Carsten. Appreciate that. Claire.
I wrote down 3 things, but I've got so many thoughts about this. The 3 things I wrote down were that brands can anticipate a future when the polluter pays. Now, that isn't with us yet in the fashion sector, but I'm sure it's coming. The second thing that I wrote down was about the Environmental Audit Committee in the UK Parliament, formerly led by Mary Cray, who championed this idea of actually regulating the fashion industry in the UK and not just incentivising, but penalising those who were wantonly wasteful. There were 19 recommendations. The government rejected all 19. So what I would say is that regulation is slow to come. Obviously, it depends which market you're looking at. The UK led with modern slavery. In Australia, where I live, we brought in the second, or maybe we were third after California, but as a country, we brought in the second Modern Slavery Act. It was 2018. So there's different tempos with different countries bringing in regulations. However, I would say that it's too slow. I mean, apparently the Fixing Fashion report, that was the name of the report that the Environmental Audit Committee rejected, but apparently it's back on the table. I think that there is more consumer pressure and that people actually want to see regulation. And interestingly, I think brands actually want to see regulation if they are forward thinking, because it helps move the needle on this. And something you said there, Andrew, about how long it takes to transition. If you leave it too late, you can't just switch. It takes 2 to 3 years, for example, to move a conventional cotton field towards an organic production system. You can't do it tomorrow. If you really want to push this, like Stella McCartney was a fantastic example of pushing regenerative agriculture in their supply chain. It takes time. It's not something that you can do because, oh, regulations are here, let's move. So I think what I would say is that we need, of course, we're all going to say the same thing. We need both. We need carrot and stick. We need consumers to move. We need culture to move. But we've also really do need regulation to say polluters should pay. I mean, I don't know how political it is to say that, but I'm quite happy to back that. I think polluters should absolutely pay. It's ridiculous that marginalised groups or the environment pays. Companies should pay. And I do think that perhaps we're moving towards that, albeit more slowly and at different tempos in different countries.
I think we're all in agreement there that if we don't move, then the companies are going to face a serious issue, and to turn it around is going to take an awful long time. So moving forward, we should be acting now, really.
And I think about digital disruption. And your examples like Blockbuster, like Kodak, like Toys R Us, organizations that didn't innovate and shift themselves to digital disruption. I think Netflix tried to sell itself to Blockbuster 5 times in 5 years, and they turned them down 5 times, and within 5 years of the last time they turned them down, Blockbuster was out of business and Netflix had taken over the market. 5 years.
But it's an interesting point you said there, Andrew, about Kodak as well. So in terms of Kodak, they understood that a digital disruption was occurring, but they didn't understand what the nature of that disruption. So it's understanding the nature as well. They still placed emphasis on, they thought everybody was still going to use their cameras, or even if they were using phones, that they wanted to print their photographs. So they placed heavy investment into that. So it's getting that right skills on the board and understanding where the market is going and what you need to do to move forward with it. Not just thinking you know your own market and you know where it's going. Have new people come in, I think. From my perspective, I don't know what the panel think about that.
But actually, I think that's a really good point in terms of understanding the nature, because bringing back closer the examples of suffering through not understanding the nature or the risk is Deliveroo, right? The IPO situation in the recent months. And so, yes, they were innovative in the sector, and they've obviously capitalized on lots of new digital innovations. And at the time, they also were innovative in terms of how they employed people or not employed people, the whole gig economy, right? So at the time, it was actually a really good thing. But what's happened over time is the IPO actually wasn't as successful as they expected, because of the social aspect of it, right? Because of the potential exposures that they may be liable to as a result of the treatment of workers and the various scandals kind of at the back of the Uber issues. So that's a really good example where, yes, they've understood that there's a shift in innovation in the market, but did they actually see where the trend on the social aspects was, or were they trying to focus on one element of flexibility, which was a big thing at the time, but obviously kind of perceptions and regulations have caught up. So that's a really interesting example for me. But I think we're also kind of strengthening the case for regulation here is when you have regulation, you have more clarity in terms of what it means, how to apply it in my sector, in my company, and what sort of an expectation that I should be then meeting. Without that, it's very much open to interpretation because everybody comes in from very different perspectives and priorities.
Absolutely. If I stick with that fashion survey at the moment from the Fashion Revolution, it was interesting that the concern over child labour, there was quite a high concern in the fashion industry of using child labour, which was 45%. And these were the ages that were concerned with it really were 45 to 75 year olds. But what was interesting about the report was 22% were concerned with working conditions. And that's really low, that they were when they were asked that very specific question. But in that same report, 70% of those that were surveyed indicated that brands should share detailed information about wages and working conditions for people in the supply chain, indicating that they may not directly care, but they want the brands to care and be transparent, which kind of goes back to placing the emphasis on the brand. So in respect of the fashion, in fashion, what is the current sustainability agenda really and direction that we're going in? What's driving it? Are brands responding to consumers, or is there a synergy between them? Can I start off with you, Claire, please?
It's interesting. I do think people care about the people who make their clothes. I think that one of the problems with the opacity of fashion supply chains is that you can't expect consumers to be able to decode very, very complex information that they're not presented with quickly. And so maybe the question doesn't cut through. You're asking slightly nuanced different points to a different community group, and maybe they don't know what you're talking about, and who can blame them? They want to buy a gorgeous item. They're buying because fashion is about desire, and the environmental or social conditions behind how those things are made are secondary generally, apart from if you're talking to the activist kind of group. And so I would say that supply chain opacity and the lack of clear language that brands the lack of clear language that brands should use to put the details across behind how they make things is one of the problems. What I would say is that I think there are also two streams, and we talked about this before. I mean, Karsten raised this when we had a chat before, but there are two streams. So you've got let's take Gen Z, because they're the ones who are going to inherit this mess that we've made, right? So, and they're perhaps the most, pervasive buyers of fast fashion. But I think there's two streams. You've got the hyper aware of social and environmental issues kind of group, and then you've also got the I'm annoyed, I feel like lockdown's killed me, I haven't got any money, my opportunities seem to be truncated, I'm going to revenge spend on a £6 boob tube from Boohoo, sod it. you've got those two streams, and maybe those people also move between streams, and I think we ought to think about that as well. You know, people are complex as fashion's problems, and so I think to look at a survey and to just try to extrapolate a key theme and a key trend in an answer is difficult. But what I do think from the research that I've undertaken, either anecdotally or just reading loads of these reports, is that we can see a general move, particularly strong in Gen Z, towards more awareness and more interest in finding out more about sustainability. And that general trend is shifting the industry forwards and making them, driving momentum in making positive change. If you then add the pressures of doing the wrong thing and being slammed all over the headlines for that, I think you've got a kind of engine for change that is moving us relentlessly towards being more sustainable. I'm not saying it's happening overnight. I did write something down which I'm going to share with you, which is that according to Forbes, Boohoo's total sales topped $1 billion in the first half of 2020, and their US sales doubled. And if you remember, that's the online, if you're not aware of what Boohoo is, if you don't buy a £6 boob tube, they are a giant fast fashion online company that far exceeds the kind of reach and interest of Topshop, which is the old generation version. But in summer last year, they were all over the news for their modern slavery-like conditions in partner factories in Leicester. Did it damage them? It did not. They came back with even stronger numbers in the last quarter. So yeah, I think in summary, the general trend is towards more sustainability and it's heading up, but we do see these two streams and this tension in consumers, and it's not possible to generalize about what's driving each one of them.
Well, Claire, but if you look at valuations in the market, and the main comparables in the equity markets are Zalando in Germany and ASOS also in the UK. And if you look at the share price performance after that incident at Boohoo, you can actually see that there has been a re-rating. So investors are putting different multiples on a company like Boohoo as they did before. And when these acquisitions or these issues came up with Boohoo in Leicester, I think it was, the share price actually halved.
It did, but then didn't it come back?
Well, it did come back because the company continued to grow, and that's exactly the point that you were making earlier, and that we had been discussing, that certainly a large share of the typical Boohoo customers don't know. And maybe some of them don't care, but eventually, I mean, there will be, and I agree, it would be a constant, let's say, flow of education and raising awareness, which will probably change this over time. Think about, think about Coca-Cola. I mean, when I was a kid, there was no Diet Coke or Coke Zero or so. And if I look at what my kids drink, they don't drink regular Coke. They drink sugar-free Coke. So think about the furs in the fashion industry. They have completely disappeared because it has become unfashionable to do certain things. And I think that's sustainability in the fast fashion industry, which I completely agree is absolutely unsustainable, as you said earlier. Being and acting sustainably with respect to fashion will become something to do, will become something young people will actively do.
Can I just say one more thing, because it just dawns on me? It's like cigarettes. It used to be so cool to smoke. It used to be cool to buy a $6 boob tube. I promise you it's not going to be in the future. So investors need to look smart at that, because fast fashion is going down. It's becoming less desirable. People are like, oh, it comes with negative connotations.
Yes.
So anyway, that's my 2 penneth.
Yeah.
And do you think it's going to be replaced by anything? So you know how cigarettes were slowly replaced by vapor?
A whole different issue altogether, isn't it? So there's a whole conversation in terms of whether that happened because the consumers decided it wasn't fancy enough, or whether that was because the companies actually wanted to still continue selling the product and marketed something else to have actually very different consequences, which I think to me kind of highlights the flip side of the consumer pressure, because do the companies need to do what the consumer is demanding? Or is consumer demanding what the company is offering, and in some way, directly or indirectly, making it attractive? And so to what extent then do we put the brands or the consumers in the driving seat and a decision-making position of what the right thing should be in the future? Because I guess there is the position where consumers are demanding X, be it Coke Zero or be it something else. But actually, did the consumers demand any kind of sugary drink in the first place? I don't think so, right? And similarly, did the consumers demand the boob tube that was made, I don't know, in Cambodia or in a sweatshop somewhere else? I don't think so. I think what they did demand is pretty clothes that was showed to them, whether it's on media, on TV, or by influencers, that it's nice and it's cool to be wearing different clothes every day, and I have to be this style every quarter, as opposed to what for example, when I grew up, my mom had 4 dresses for me in the wardrobe for about, I think, 7 years. One dress to school, the other dress when that one has been washed, and 2 dresses for a special occasion. That's pretty much what it was. We used to change, the scarves and like handcuffs and things like that. And that was cool, because that's how people, were around, and it was cool to not have too many things, because it also kind of says a lot about you. So I'm really curious about, where is the role of the brand, and should the brands be in a position, well, the consumer told us to do this, and therefore that's all we can do? Or should they be in a position, well, actually, we have so much power via marketing, via whatever it is we actually have at our disposal, and we think this is a better way for the market, we'll create the market, or we'll shift the market. Is that what they should be? Or should they be in a position, consumer wants a label, I'll give them a label. The label might not mean very much, but I'll give them a label. So I think that's a really important one.
I completely agree. I think companies and brands are very good at behavior change and very good at creating demand for things. And I think that's something where they have to own up. And also, one of the things that increasingly frustrates me at the moment is hearing sort of senior political leaders and others when they're asked the question, what gives you hope for the future? What gives you hope that we're going to get out of this situation we've got ourselves into? The constant answer seems to be, young people. Young people care. Young people will get us out of it. Young people will dig us out. And this idea that it's young people who care most about this, and it's young people who are going to solve the problem, I find very frustrating. It's such a cop-out answer, because it's like, it'll get dealt with in 10, 15 years once, whereas the people who have the power right now to make a difference, I'd be much more keen to hear, why I have hope? I have hope because me and my colleagues are doing something about it right now, and I feel very hopeful about that, and my kids feel very hopeful about that, because they're seeing what I, as their parent, as their guardian, are doing to try and preserve the world for them. But the other thing that I think is important to note is that this focus upon young people, and young people being the reason why organizations should become sustainable, is also a bit of a red herring, because young people are the canary in the coal mine, of cultural shifts. They are just the first warning sign, because they are the most extreme example. But I think the largest survey ever undertaken on sort of climate change issues, it was reported in The Guardian, and it was by the United Nations. This huge survey across dozens of countries around the world. I've just got the thing up. Actually, I'll share my. Oh no, host display was share screen sharing. So the 69% of 14 to 18-year-olds said that climate change is a global emergency. So 69% 14 to 18-year-olds. 18 to 35-year-olds, 65%. 36 to 59-year-olds, slightly more than the millennials, that's 66%. 60 plus year olds, 58%. This is in dozens of countries around the world, literally all over the place. So it's not just young people who care about this. Everybody cares about this. 2/3 of consumers care about this. But it is an incredibly complex issue. And so it really is for brands to get ahead of the curve. And make sure that they're meeting the demand it's this rising wave. And like we've talked about transition risk already, if you don't move fast enough, you'll find yourself in the position of Blockbuster, where there's not enough time for you to shift your business model. The rug will be pulled out from underneath you. And I think the pandemic has accelerated that, in the same way as it's accelerated the remote working and digitization of the workforce. Previously I was saying by 2030. Now I'll say by 2025. If an organization hasn't gotten on the right side of history with their own sort of sustainability strategy and how they are embracing sustainability as an organization, by 2025, they will find that the rug is pulled out from them faster than they can adapt. And they will go out of business. What starts as an environmental or a social unsustainability will very rapidly tip into being a financial unsustainability. So they need to get ahead of it.
I'm conscious of time because we're coming up to 10:45, and I know there were questions from the audience, and I know we still had questions to go through, but we've had such an interesting conversation. There may be, before I start going to the questions, is there a sort of one last point each panelist would like to add to this talk, and then we can start addressing the questions? Claire, would you like to begin with any last comments you'd like to make?
Yeah, I would say that while it's easy to sort of heap shame on the industry and to focus on the negative side, I'm also seeing an enormous appetite for change, and a lot of brands really are doing great work in terms of really trying to shift, and it takes time. And while I'm no apologist for bad behavior, I also do think we need to cut some slack to the industry to say that yes, there are lots of good people trying to do good things, and this stuff takes time. So I don't know, I often feel like I'm saying bad fashion, and that's my message. And I do think we need to say it, but I also think we need to applaud the people who are trying to move things forward.
Absolutely. Carsten.
Sorry, I have to unmute myself. I think, as a message for companies to things to look at or measures to take in the future, I think there are a number. First of all, they need to look at promoting a circular business model, which we're still in a linear business model, but we have to go to a circular business model. Then increase the transparency in the supply chain for themselves, but also for the inside of their stakeholders. Look at prioritizing sustainable raw materials. Claire made the point that this is not easy to do. It takes time, but this will certainly be important. Maintain ethical work conditions, and last but not least, implement reporting systems on sustainability. So not only do things, but actually go out and talk about it and make clear to your stakeholders how you do it, how you improve, what the measures are, what you do. And finally, I think overall important is to make the sustainability agenda an integral part of the corporate strategy. So really go from corporate sustainability to a sustainable corporate strategy in that context.
That's great. Andrew.
Yeah, I'd reflect more. Yeah, what Carsten and Claire have already said. Fundamentally, businesses make money by solving problems, and the more complex and challenging a problem that they solve, the more money they can charge, and the more money they are likely to make. And the closer to the movement of money, generally, the more money there is to be made. But you make money by solving problems. There is no problem more complex and more serious than the potential threat of human extinction. So the organizations who place themselves at the forefront of solving this challenge in all industries are going to do very well, because they will be solving the most complex challenge that humanity has ever faced, and that will give them a business model that will see them good for decades to come, which absolutely cannot be. How many industries and how many companies can you look at and go, yeah, I can definitely see that these will be operating in 60 years' time? That used to happen. PwC has been around since the 1800s. What are the brands that are going to survive another 100 years? And we've seen 100-year-old brands getting the rug pulled out from under them faster than they ever thought possible. So there's a huge opportunity here, but also a huge risk. It's two sides of the same coin.
Marina.
I couldn't agree more with the points that were raised just now. And I think just to the 2 points I wanted to add to the list that Carsten, you have shared with us on Action Plan. One is, I think we need to remember that consumers are also humans and people, and they have different hats that they wear. And one of those hats are actually their employees, their managers, they work in organizations, they run their own businesses. And if, based on the statistics Andrew has shared, everybody cares, and to a different degree, but everybody cares, they also care in the domain that they have control over. And that domain might be senior management of a company that has just gone through turnaround, and they've now been asked to come and join the organization. They will think twice before they join an organization at the turnaround situation, which is not aligned with their values. They also may be employees of an organization that currently hasn't actually followed through on the list Carsten has shared or haven't put sustainability on their agenda, they'll think twice about how long they might stay in that organization or how many other companies they might apply to that doesn't have that message. But the final point I wanted to just leave with that is that sustainability, as we speak of it, has lots of definitions. We've kind of mentioned this, but in its essence is let's not do harm. Essentially, it's kind of equalizing and balancing. Just do harm less or do it better, and kind of neutralize and come into zero. What we should be thinking about is how do we become regenerative? So what's that journey where we neutralize the negative impacts and start adding value environmentally, socially, economically, in any other context, because you can't become regenerative until you have actually eliminated the harm that you create. And be it CO2 or anything else, we all emit CO2 even when we breathe. So we can't really say we're going to get down to zero on everything, but we do have to think about that journey and transition upwards if we are to think about the long term. And regeneration does mean you have to think about this in both.
Absolutely.
Can I tell you a thing? Can I just tell you a thing? Because it's so nice. Marina, we all emit CO2 when we breathe, except those, oh, well, you still do. However, you can personally offset it through your jumper as you wear it via the invention of a recent graduate from LCF who runs something called Post-Cardon Lab. Her name is Jan Jen, and she's been working with a Canadian designer called Olivia Rubens, and they made what's called living fabric and living fibres, which basically extracts the CO2 as you wear it, so you can be carbon neutral in the wearing of the jumper. Quite nice.
Brilliant.
So there are innovations.
Solutions are out there. We just have to scale them up and apply them, right? So that's, I think, a really important point. There are solutions, we have them. We just have to use them and scale them.
Fantastic, that's great. I'm going to take a couple of questions. I've noticed that we've already started answering some of them, which is great. There was one question that turned up, which I think we had already touched upon when we were prepping, which is really, what is the, this is from Daria, she says, the panel's opinion and the rise of the fast fashion since the new social media role of the influencer. What is the role of the influencer? And I know that was something that we touched upon. I think, Carsten, that was something you touched upon in our prep talk. And Claire, you mentioned that our lives would be a lot easier if a lot of the influencers pushed the sustainability agenda. Are they influencing consumers? Carsten, I'll start with you.
Well, I mean, if we think about how this model works of influencing, it's basically raising awareness and raising demand for product. So I'm a bit skeptical that and a bit, let's say, I think it's wrong in many aspects. And I doubt that this will quickly change. It's, I think, in the responsibility of the corporates how they use that channel and what kind of influencers they support. So because influencers are reacting to market demand, basically. Yeah. So I think there is responsibility with
from them,
the corporates. Yeah, definitely.
Yeah. What does the rest of the panel think, Claire?
Well, actually, we are seeing a change. Model activist is now a slashy term, and rightly so. The rise of, obviously, social media gives voice to those who were previously seen only as a still photograph, and brands could pile on their image and vision upon them, but now models obviously speak. They use, I don't know, I mean, essentially I think the future of influence is to be able to have something to say as well as look good as while you're saying it, and we're seeing that change. It's very evident. I mean, the faces that people look up to now are voices too. And I think perhaps it's been more advanced in the sort of social justice space, but I think that it's also there in the environmental space. Of course, there's tension if you're also selling a pair of jeans. However, I do think that the silent kind of face, think about Kate Moss, she never used to speak. The next generation of Kate Mosses is not her, it's I don't know, Adoa and Girl Talk. It's someone who's got something to say, who's got a podcast, who's got opinions, who's doing Instagram lives, who's championing causes, who's on marches, and that's the future of influence for me.
Fantastic. Andrew?
I'd say that celebrities have been around a long time. Influencers aren't a new thing. Influencer is just a new term to describe something that's been around for a long time, which is fundamentally that there are people who are placed into a position where they can amplify messages. And they act as an amplifier. They're the beacon tower on top of a hill that can take a message from someone that they've spoken to who doesn't have an audience and then amplify it to a much, much larger audience, or to an audience with a specific set of interests. And so that amplification, we're seeing more and more now, actually, not necessarily regulation, but certainly the social media platforms themselves are cracking down on making sure that influencers are being responsible and transparent in what they're doing. So we're seeing the same pressures that organizations are being subjected to being applied to influencers, where they must be transparent about what advertising that they receive, and that if something is an advertising post, they now legally and well, not even legally, but Instagram will force them to declare that this is a sponsored post, and if they don't, their account will be pulled off and their amplification is gone. So I think it's important, and I think that it's important for us to place the same expectations upon those with a voice and an audience as we do for other kinds of brands. There is not, in terms of influence, there's not necessarily a difference between a corporate brand and a personal brand.
I'm being pushed for time. We'll have one more question, but I also have been prompted to remind the audience about our disclaimer and not to use any of the content that we've had today. And these are our personal opinions and not necessarily representative of any organizations. One last question. I'm sorry, we are running out of time today, but everybody seems to be enjoying our discussion. One question is, hi everyone, in terms of the movement from a linear model to a circular economy model, are there notable companies operating with an effective circular model at the moment, or at least better than others? Marina.
That's a really interesting question, because circularity can also be defined in very different ways, and there are different models that can apply to circularity. So I guess a couple of examples that probably could stand out. So BMW, for example, recently has launched a car sharing scheme. I say recently, last couple of years, actually was in Europe. And then originally it was intended for BMW drivers who are already there. But actually that gave rise to interest from outside of the existing owners, and created a separate revenue stream, and became quite useful thing for them to kind of generate interest for a brand from those who couldn't afford it. So some companies go down the route of actually having an additional revenue stream from circularity that ends up, growing. We've seen a lot on different retailers who are now doing the package free and all sorts of kind of unpackaged plastic free and by weight on tap, etc., dispensation of various fruit and vegetables. That is circularity, and that's obviously growing popularity from different perspectives. Different business models companies have utilized from sharing economy. Airbnb is probably one of the hugest ones, right? That's circularity in its action. So I think there's different perspectives, and if you look at the very basic things like utilization of resources differently or using less of it, so reduction of packaging, or reduction of how much material, secondary, tertiary, and redesign of packaging, or redesign of the process to eliminate that, all of that is very much circularity in action. I think there's got a spectrum here.
Thank you so much. I'm sorry, I'm getting direct messages about the time restraints on this. I'm sure we could have talked, for at least another half an hour or an hour. I really like to thank my entire panel here today for their time and amazing expertise. Claire Press, Andrew Griffiths, Carsten Stachter, and Marina Bradford. Most of them you can find on social media as well. And I'd just like to sum up that we've been talking about sustainability and fashion today, where we need to consider the social sustainability aspect of it. What is the definitions? And we must have it at the forefront of our minds, because it is an aspect of risk for most of our businesses, and it's dangerous not for us to consider it and move forward and change. Otherwise, we are going to be lagged behind. And to use Carsten's word, let's become a leader in sustainability. Can we enforce it? Yes, we can, and we're making strides to that. But I think the consensus today was the strides in terms of regulation and legislation is slow, and there are differing tempos for differing countries. And good governance is at the core of most of this. So thank you very much for everybody's time today. For those that are in the audience, if you'd like to stay on, we are now going to put you into rooms for network.